We are here, we are here, we are here. What an amazing day. Okay, everyone, this is Cam Jones, Auxiliary Analysis. We are marking up NZD, USD. Let's take a look at what's going on in the market. We are on a monthly time frame. Let's head over to price, see what's going on. The price action candle is a bearish hammer. So if we look at it to see where price is coming from, price is coming from first leg, second leg, third leg, fourth leg, retest, market push down. We have a double top and a retest, or overall 3 pushes to that top that push that market down to that midpoint of that area, the lowest of that area for that market to come before it drops down further would be this line here. Okay, so let's go back to price. So we do have higher highs, lower lows. We know we're coming from a double top and a retest, or a triple top overall. Price action reached the midpoint line. So let's take a look at what's going on with the second last candle near price. So price action body, which is price, is below the previous body. Price action wick is not below the previous wick. So price is between the second and last candle, which can be consolidation until we see the breakdown, break up, or that market's going to continue to consolidate within that pattern of price candle. So let's walk down the time frame to see what we see. We may be seeing a break, maybe a retest, maybe not. We'll identify as we walk down further. Headed down to the weekly time frame. Okay, we see a break with price. So price action is a doji. A doji is an indecisive candle, meaning that we don't know we do not know what direction the market's going to go into until we receive a engulfing pattern to the upside or to the downside of that doji. So we're looking for something to engulf this area to that upside that can push that market up. Okay, so if it enters that side again, that means we're looking for that break and retest for that market to shoot up. It could be an incline W, or we just have straight up bullish candles pushing up. Or we may be looking for price action go off the previous candle. May need to price action to the downside. May need to definitely need to engulf the price action candle, but may need to engulf the second, third candle bodies and wicks, or may have to show a dominant candle that's can show that it can push that market down. Okay, so we definitely looking for some type of pattern to identify itself in this area on the weekly time frame. And we are at the break. Market came back to retest, and we just waiting for the market to do what it do. Headed down to the daily time frame. Price action candle, bullish inverted hammer. Okay, so market's working its way up. We can see that incline W from that market. Also, that's the break of that area of resistance. A support turned to resistance. Market came back to retest, not once, but twice. Could be a little more. It could be multiple times than just twice. But if you're looking at green to red and red to green, it's red coming down, green coming up. Came back down to retest this area of support, and we pushed back up. So it's about 2 spikes up to that high. Market's on that second push. Okay, so if we draw it out, it'll be, if that market's gonna work its way up, we'd be looking for that market to hit the first, second, third, fourth double bottom incline. We look for the break retest. The market pushes up. Okay, if the market's gonna work its way down, that means the market will not break this area of resistance. So it will be the break. Market came back to retest. Retest. Market came back to retest again that area of resistance. So drawing it out will be first leg, second leg, third leg. So market's in that third leg, could be pushing down for that fourth. If it does, we're looking for some type of pattern to identify itself in this area that's probably going to engulf this area here. It's going to push that market down. And then we'll probably be waiting for the break and retest. If it's not at this area here, it depends on how far this market jumps to the other side. If it breaks to the other side, then we look for the break and retest to drop down. If it doesn't, market just come down, break this area, retest somewhere in this area, one of these areas of support, and then work its way down. Headed down to the 4-hour time frame to see what's going on. Price action has entered back to the opposite side of the SR line that it came from. So it broke, retest once, retest twice, came back to area support, and then we pushed up. Market pushed up actually from a double bottom, so let's draw it out. First leg, second leg, third leg, fourth leg, retest one, retest two. Market's on that second push, back up, back onto the opposite side of the SR line. Market's currently, let's take a look at what's going on with the price. On the 4-hour price action, bullish inverted hammer, more like a solid candle, but price actions did not break above the previous close, above the previous wick of the previous candle, but it did grow above the second last body of that candle, but didn't close out yet. So that means that market is in a range. So if you connect the wicks, connects the bodies, we can see that market is ranging at an area of support. So we may see that market's tick, 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 tick until we finally get that breakout to the upside, breakout to the downside. But we do know market did break back up to the opposite side of SR line. We may be looking for the market to retest. Retest always happen. If we don't see it happen on the 4-hour, it will happen lower on the lower time frames. We may be looking for some entry to form a pattern after that retest for that market to push up. If the market doesn't break, we can see a first, second, third, maybe an M pattern, and market could drop down or just do a single touch, and then we can get bearish red candles coming down from that structure. Okay, and then market be back on the other opposite side of SR line. Price action inverted bullish candle. Price action is having a hard time breaking that area of resistance. Spiked up once, spiked up twice, spiked up 30 times. Stopped that area of support, and it pushed up midway of that area. So midpoint, high, mid, somewhere at the low of that area. That's low. So market's hanging around that midpoint of price. We're going to see the market's going to spike up to touch that area of resistance. And if we do see that, market can be pushing further up. Headed down to the 2-hour time frame. Let's see what's going on. Price action candle. We get the same patterns. Price action candles the same pattern over and over, which is the bullish inverted hammer. Different sizes, but what is happening? Markets at that area of resistance spiked up once, spiked up twice, spiked up 3 times, spiked up 4 on that 5th time. So that's already 5 pushes to that top, but price is still active. So 4.5 pushes to that top. And now we can see market spiked up. Now, if you pay attention to the spikes, we identifying the same thing as we walk down. Market spiking up 3 times with the wicks. 45-minute second last candle is a retest. So market retest that previous area of the break, that resistance turned to support. Market sitting on a doji with price action. We're looking for engulfing pattern to engulf that previous candle. On the 30-minute price action, second, third candles are all doji, so that's markets consolidating sideways. We're looking for a breakout within that area. Headed down to the 15-minute. Now we see some type of pattern forming. So we could be forming that first, second, third, fourth retest, and market could be pushing up. So we have a double bottom, a retest, and we can see markets pushing up, trying to come up to this area of resistance. Paying attention to price action candle on that 15-minute time frame. Price action having a hard time breaking the second to last candle wick, but it did break the last candle body. Actually, it didn't break the second to last candle wick, so that's a wedge pattern. So market is getting very tight in that area. So now we see the retest, and this is why. So market did a double top and retest. So markets look like it's expecting from that first, second, third, fourth retest. Market can be pushing down, but not too sure yet. Didn't get that pattern to engulf this area here. So if you see the red engulf the previous candle, that market's pushing down. If not, we get a green candle, market's pushing up. If it is pushing down, it's coming from a double top and a retest, and market's working its way down. Headed down to the 3-minute doji side by side, and we can see that market's creating that. Is still in that area of consolidation. Market broke on the 1-minute time frame, came back to retest, and we still waiting for that pattern to identify itself with a breakdown or break up. Very important information, guys. Please study and review Forex pattern cheat sheet. Click on images. Also study breakout retest strategy. Okay, guys. Cam Jones, FX.